The Architect of the Intelligent Grid, a comprehensive guide to Itron, ITRI. As of February 15, 2026, the world is grappling with a massive energy trilemma: how to provide energy that is simultaneously reliable, affordable, and sustainable. While headlines often focus on the giants building solar panels or electric trucks, Itron Inc., ticker ITRI, is the company building the nervous system that makes those technologies actually work. Itron enters 2026 at a fascinating crossroads. The company is in the final stages of a multi-year transformation from a traditional hardware manufacturer, making dumb meters, into a high-margin software and service powerhouse. With its Q4 2025 earnings call scheduled for just 2 days from now, February 17, 2026, the stock is currently a focal point for investors looking for value at the grid edge. This 1,500-word guide explores Itron's business model, its recent high-stakes AI partnerships, and the specific financial hurdles it must clear this year. 1. The business model: more than just a meter. For decades, Itron was known as a meter company. If you looked at the side of your house, there was a good chance you'd see an Itron box measuring your electricity, gas, or water. Today, those boxes are essentially smartphones for the grid. Itron organizes its business into 3 distinct segments. Device Solutions. This is the traditional hardware business. It includes the physical smart meters and sensors. While this is the foundation of the company, Itron has been strategically reducing its focus here, moving toward an asset-light model to improve profit margins. Networked Solutions. This is the connectivity layer. Itron builds the secure communication networks that allow millions of meters to talk to the utility company in real time. This is where the company's moat begins. Once a city installs an Itron network, the switching costs to a competitor are prohibitively high. Outcomes, the growth engine. This is the future of Itron. This segment provides the brainpower, software, data analytics, and AI services that help utilities predict power outages, manage EV charging loads, and detect water leaks before they become disasters. 2. The 2026 catalyst: AI at the grid edge. The biggest story for Itron in early 2026 is its aggressive push into artificial intelligence. At the DTech 2026 conference held earlier this month in San Diego, Feb 2 to 5, Itron dominated the conversation with its grid edge intelligence portfolio. The Copilot for Utilities. On January 28, 2026, Itron deepened its long-standing partnership with Microsoft. They launched a first-of-its-kind Intelligent Edge Operating System (IEOES) connector for Microsoft 365 Copilot. This allows utility workers to use natural language to ask questions like, where are the highest voltage fluctuations in the downtown district right now? It turns decades of dark data into actionable insights, significantly reducing the manual effort required to manage a modern grid. Partnerships with the Chip Kings. Itron is also collaborating with NVIDIA to bring machine learning directly into the meter. By processing data at the edge, on the device itself, rather than sending it all back to a central server, utilities can react to grid instability in milliseconds, preventing wildfires caused by downed lines or managing the sudden surge of millions of EVs plugging in at 6 p.m. 3. The upcoming earnings, February 17, 2026. Investors are currently holding their breath for the Q4 2025 results coming this Tuesday. The report will be a truth-telling moment for the company's 2026 outlook. What to watch for? EPS guidance. Analysts are expecting adjusted earnings per share of roughly $2.19. This would represent a staggering 62% increase over the same quarter last year, reflecting the high-margin software sales kicking in. Revenue tensions. Revenue is projected to be around $561 million. Interestingly, this is an 8% decline from last year. This revenue dip is actually intentional. Itron is walking away from low-margin hardware contracts to focus on high-margin software outcomes. The backlog. As of late 2025, Itron had a record-breaking total backlog of $4.7 billion. Investors will be looking to see how much of that has been converted into actual cash flow and how many new distributed intelligence contracts were signed in early 2026. 4. Financial health, valuation, and debt. If you look at Itron's stock price in February 2026, trading around $104, it sits well below its 52-week high of $142. For a new investor, this creates a potential value opportunity. The undervalued case, PE ratio. Itron is currently trading at a forward price-to-earnings ratio of approximately 17 to 18 times. Compare this to its peers in the electronics testing industry, which often trade at 25 times or higher. PEG ratio. Its price-to-earnings-to-growth ratio is near 0.54. In the investing world, a PEG ratio below 1.0 is often considered a sign that a stock is on sale relative to its future growth potential. The debt caution. However, Itron isn't without its scars. The company carries a total debt load of approximately $1.26 billion. While its current ratio, liquidity, is healthy at 2.17, the debt-to-capital ratio of approximately 42% is higher than the industry average. This makes Itron more sensitive to interest rate fluctuations than some of its leaner competitors.
5. Risks, the lumpy revenue problem. Every investment has a catch-22, and for Itron, it is the nature of its customers. Utility cycles. Itron sells to utility companies, some of the most conservative, slow-moving organizations on Earth. Contracts are lumpy, meaning the company might go months without a major win, followed by a $1.5 billion contract like the one they recently secured with Luma in Puerto Rico. The wait-and-see regulatory environment. In 2026, regulators are becoming more cautious about passing infrastructure costs on to consumers. If project approvals are delayed, Itron's revenue outcomes could shift from 2026 into 2027. Competition. While Itron has a strong moat, it faces intense pressure from specialized water meter companies like Badger Meter and massive industrial conglomerates like Siemens and Honeywell that have deeper pockets for R&D. 6. Strategy. How to invest in Itron in 2026. For a first-time investor, Itron is a patience play. It is a mid-cap tech stock with industrial roots. The pre-earnings trade. If you believe Tuesday's earnings will show a successful transition to software, the current $104 price might be the lowest it gets this year. The smart city hedge. If you are worried about the volatility of pure AI stocks, Itron offers a grounded way to play the AI trend. Unlike a software company with no physical assets, Itron has millions of endpoints already installed in the ground. They own the real estate of the grid. Volatility management. With a beta of 1.48, Itron moves significantly more than the broader S&P 500. It is a stock that you accumulate over time through dollar cost averaging, rather than trying to time a perfect bottom. Conclusion. The future is distributed. Itron, ITRI, in 2026 is the quintessential hidden champion. It isn't a household name, but it is the company that ensures that when you plug in your electric car or turn on your tap, the system behind the wall doesn't collapse. By pivoting to an outcome-based model and embedding AI at the grid edge, Itron is attempting to become the operating system for the modern city. While its high debt and lumpy revenue require a stomach for volatility, its current valuation makes it one of the most interesting industrial tech stories of 2026. The verdict. If Itron can prove on February 17th that its high-margin outcome segment is growing at double digits, the current price discount may not last long. It is a bet on the brains of the energy transition.